Celebrating 30 years of phenomenal trend forecasting, 5 times a week, Monday through Friday. Here's Gerald Celente with today's trends in the news.
Hi, this is Gerald Celente. It's Wednesday, February 21st, 2018, and here are some of today's trends in the news. On the market front in Asia, Shanghai still closed. Lunar New Year. What's going to happen when it opens? A lot's been going on since it closed. Nikkei, Nikkei's up a little bit. Hang Seng's up nice. Over there in Europe, just DAX is down. And here in the States, another day of volatility. Yep, Dow is up over 300 points. Closed down 166 points. Gold, flat. Oil, beep, a little bit. And Bitcoin can't break over that 10,000 strong. It hit over the 11,000, that's good. Shows more strength, but now it's down some 7.4% from yesterday. So what happened with the Dow? Closed lower on Wednesday after interest rates reached fresh multi-year highs following the release of the latest Federal Reserve minutes. And the 10-year yields on the bonds hit a 4-year high on that note. And basically the Fed said, well, inflation's going up a little bit. We're going to raise interest rates a little bit. And they said that they're going to do it gradually. But that wasn't good enough. So what's going on? Treasury yields in the U.S. dollar whipsawed following the news. The benchmark 10-year note yield initially fell from session highs after the release of the Fed, but recovered to reach a fresh 4-year high above 2.95%. Wow. By historical levels, that's still very low. When you look that the Fed has raised interest rates 5 times since 2015, and they're only playing around between 1.25 and 1.50. When you account for inflation, we still got negative interest rates. But the markets can't stand it, and you're seeing them react to higher interest rates. On more positive news, U.S. Composite Purchasing Managers Index, the PMI, rose to its highest level in more than 2 years, reaching 55.9, according to IHS Markit. Now, anything over 50 is growth. Anything under is slowdown. So that's a positive number. Now, coming into today, story in the Wall Street Journal. In today's Wall Street Journal, before the Fed announced what they were going to do. Forecasters see Fed lifting rates faster. More forecasters say they now expect 4 Fed rate increases this year, up from 3, because of the deal to increase federal government spending by $300 billion over the next 2 years. To have increased spending was really, to us, makes absolutely no sense, particularly when you have corporate earnings doing very well, the economy is doing okay. To give this kind of more debt, and again, interest rates go up, you just took on more debt, stupid, and now you got to pay back that debt, stupid, with higher interest rates, stupid. Or should I say senators, congressmen, and president to be respectful, or else let's just save.
Oh, come on now. That ain't even bullshit. That's horse shit.
It's horse shit that they did this. And it goes on. The funding bill is more generous than many economists anticipated. More generous. How about more stupid? Stupid? But that's what we have here. Stupid. So now they're saying they're going to raise interest rates 4 times, the guess is for the 4th time, according to the futures indexes, about 23%. We don't think it's going to happen. We're running against the curve on this. You saw what happened to the markets today. You saw what happened to gold prices. They were going up a little bit and bam, flatten right back out. Because the stronger the dollar gets, the weaker gold gets, and the weaker the markets get, the higher the interest rates go. And again, when we're talking about yields, here we go. Another factor some investors say could push yields past the milestone, again, getting over 3%, and it's still extremely low when you look at pre-existing levels. It's really standards. This is way below. Another factor that investors say could push yields past the milestone is the government itself. The rise in yields has coincided with the passage of a $1.5 trillion tax cuts and the resulting larger budget deficits threatens to drive up yields as the government boosts the amount of bonds it sells to finance the cuts. Isn't that great? Anyway, on the oil front, oil closed a little lower because they were expecting inventories to build. But after the markets closed, the report came out, actually inventories fell a little bit. And as for the rig count, it's kind of flat. Gas rigs went down, oil rigs went up. So where we see oil is where it's at. But where is the market going? What's going to happen? You know. Trend alert. Trend alert. Equity market forecast. Correction, crash, or new highs. That's right. Don't forget to click on to your trend alert. We're going to show you where these markets are going. We are putting together information and giving forecasts that are running contrary to just about everything else that you're seeing out there. It is history before it happens. And you know me. I was negative for a lot of years. When Trump came in, I said the market was going to rally, the first magazine to do so. We called a 10% correction before anyone did. It was in your December top 10 trends. And now we're telling you where it's going from here. And what happens when interest rates go up? Not only the markets. Weekly mortgage applications tank even more as rising rates make homes less affordable. Mortgage interest rates jumped again last week, causing mortgage application volume to fall 6.6% to a seasonally adjusted basis from the previous week. Applications to refinance a home loan, which are the most rate sensitive, fell 7% for the week. The average contract interest rate for 30-year fixed rate mortgage increased to its highest level since January 2014 at 4.64% from 4.57%. Mortgage applications to purchase a home fell 6% for the week. All right? We're going against the grain on the interest rate rises. Because again, when you look at the Trump tax plan, we're not making up the number. The Tax Policy Center, the Institute, whatever these nonpartisan groups are showing, that the 1% gets between 82 and 83% of the value of the tax cuts. Go back to what I just read. Mortgages. Home ownership is increasingly for the wealthy, according to the latest sales data. What is this, from the World Socialist Organization? No, it's from CNBC. Sales of homes priced below $1,000 fell 13% in January, year over year. Sales of homes priced between $1,000 and $250,000 fell 2%. The share of first-time buyers also fell 29%. The biggest sales gains were in homes priced between $500,000 and $750,000, up nearly 12%. All right? That's where the dough is going. Again, rising rates. The entire equity market boom is a fraud. They didn't teach you quantitative easing, zero and negative interest rates in Economics 101 or when I went to graduate school. They made this crap up to enrich the rich so they could boost the markets up. And now they're reaching the peak, because even at the wealthiest, it's still not enough. In New York, retail storm arrives. Manhattan, a retail juggernaut, hasn't escaped the market headwinds. After reaching a record in 2014, retail rents in Manhattan started sliding, and now they've plunged 18%. That's right. So there you got it. This thing's peaking. What's keeping the markets up? Cheap money. Qualcomm lifts bid in race for NXP. A nice little other story here in the Financial Times. HSBC flags up threat of $1.5 billion penalty. Group braced for hit from probes into Swiss unit as Gulliver hands over reins. They warn they have to pay at least $1.5 billion in penalties over alleged tax evasion. That's it, man. Another criminal operation. Nobody gets thrown in jail for it, but you better be a good boy and girl. That's right. Don't go over that speed limit. Don't have more than 2 drinks. And don't forget to salute. Anyway, moving on. So it's okay for HSBC, one after another, money laundering, you name it, all these felonies from the banks, whatever the charges are. But here's the big one. Jihadists embrace Bitcoin to finance their battle. Look at the propaganda, huh? Oh, that Bitcoin, HSBC, all the rest, they could do trillions of dollars worth of dirty deals. You know how much the jihadists got? According to this article, Madonna, we got to worry. So far, according to the online ledger, the group has received about $1,000. Whoa! You could blow up half the world with that. What garbage. Because that's all they sell is propaganda. Here, look at the front of this New York Times. Terrible picture, terrible story. Misery mounts as Syria shells rebel enclave. Over 200 killed, many of them children. Oh, look at this Wall Street Journal one. Again, children and women. Syrian regime attacks rebel-held enclave. You know, killing, blah, 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 right? Terrible. Those Syrians. What murderers they are. But hey, this picture didn't even make a picture. And the story never made the toilet paper record or the Wall Street Journal. Turkey launches attack on pro-Assad forces. Opposition activists said yesterday that more than 210 people had been killed from bombardments in besieged eastern Ghouta in the past 2 days, including 54 children. Hey, it's okay, man. The Turkish did it. That's okay. But when the Syrians bombed and killed their people, oh, that's an international crime. Hey, how come the prostitutes didn't show us pictures of all the people slaughtered in Mosul and Raqqa by the United States and, quote, the Allies? How come we never saw all the people, never saw pictures like that of the bombings that the United States killed over 1 million people in Iraq? You know why? Because they have, quote, embedded reporters. They're not journalists, they're prostitutes. And embedded is perfect because they're in bed with them and they're taking it you know where. Because during the Vietnam War, when I was a young guy, we used to see the horrors, but now they're covered up. And all they do is they sell you propaganda. From HSBC getting a slap on the wrist, from Bitcoin being used by jihadists, to Syria killing people and making a front page story of it, and when the United States and its allies kill people, you never see it. That's why trends in the news, trend alerts, Trends Monthly, and TrendsJournal. It's true news. It's history before it happens. This is Gerald Celente, and that's some of today's Trends in the News.